Hi everyone, I haven't done one of these videos for a while, but I thought it was a really good time to do this video after the correction. There's some really good buys to be out there in the stock market right now, and I thought I'd share my opinion on some of the buys. I could have put quite a long list on here, but I went for 5 well-known stocks, big market cap stocks that are really undervalued right now, and these are what I've chosen. I'm going to go a few reasons why I chose them, but yeah, like I said, there's quite a few I could have picked, mostly kind of tech heavy on this one, because the Nasdaq is down probably the most, so there's the bigger bargains really in the tech sector. So I gave a broad different industries. I don't think any of them really clash too much, but a very broad section in the tech sector about the choices I've made. So I'll start with number one. Number one is these kind of all happened really in the big correction. Apple's has been since the earnings. Basically, Apple had a bad earnings, and then we've had a downgrade because apparently because of the iPhone and the iPhone sales and what have you. So that's pushed the stock down. I think the highs of Apple, the 52-week highs, are around the 230 mark, around there, and now it's already dropped down to the 200 mark. Now I've just checked this morning before actually recording this video, and I think the 200-day moving average is around the 191 mark, and it's breaking the last support level. So more than likely, I feel like that stock is going to go down to the 191 mark. So if you're thinking of purchasing Apple, if you're a long-time investor, obviously you hold it. Like me, you're going to hold it a while, and it doesn't really matter too much where you get in. But it's always good to try and catch it near the bottom to try and maximise, the profit that we get from investing into a stock. So yeah, around 200 per share is not a bad place to get in. You're getting yourself a bargain, but if you're a little bit like a little bit more risk, shall we say, maybe just give it 1 or 2 days just to see if it gets that 191 mark. If it breaks below that, then we'll have to have a look at where the other support level would be at. But I reckon at 191 is where it'll probably bounce now. So I'm keeping a close eye on that. I don't think I'll invest in it, but if I did not invest into Nvidia, I might have been looking at a little bit of Apple. I do like the stock. It's not my favourite stock, but at a price like that, I would consider picking some up. So that's number one, Apple. Number two, Google. I've been thinking about making a video about Google for a while, just for a very simple reason. Google has sold off quite a bit. I think it's down to the 1,000 per share mark, and its 52-week high is near 1,300. So it's nice discount right there. But the amount of people that I actually see now talking about investing into stock, like bank stocks, Berkshire Hathaway, I know it's a great company, but when you look at the return of these companies, which is going to get more, them banking stocks or Google? It's going to be Google. The revenue growth is massive. The areas are in massive. The return you're going to get on Google is going to be far better than them stocks. So why are people investing into them stocks when you got Google at a discount like that, which is such a great company? Absolutely bonkers. I'm in a few investing groups on like Facebook, and I've seen a few people like posting about this, and I've kind of stopped myself from actually commenting on their posts going, why not just invest in Google? It's a better company, you'll get a better return. But everyone's can make their own choices. Everyone has their own opinions. That's fine. That's my opinion, guys. On this one is that Google is a great company, and why you'd invest in other companies when you got Google at a discount like that is absolutely beyond me. Really great company. Number 3, MasterCard. Really weird because I've checked Visa, and Visa is actually pulling back quite a bit. The payment sector does recover normally quite quick from this sort of correction, and Visa has pretty much recovered, I think, about half of it. MasterCard has only recovered about probably a quarter of it, I'd say. So great company. You don't normally get payment stocks on this much of a discount. Square's still down quite a bit, but big discount if you like MasterCard, if you like Visa. So have a look at that one. Number 4, Adobe. As you know, I really like Adobe on this channel. It has had a good growth spurt, so it's off probably a little bit of a sell-off period as well, and a little bit of a cool-off period. But eventually that stock's going to rally back, and it's going down a little bit more. I think that stock will go to at least 280 by the end of the year. So I think that's a nice easy swing play or a long term hold, however you look at it. Number 5, Nvidia. I've said on this channel in my last video, or my second last video, should I say. Nvidia is a great opportunity to get in now. The growth, it's gone from like a growth company to a good value and growth company with its PE side of it as well, and its forward earnings. Great company, great growth. Can't say too much about it. I think the earnings for Nvidia are actually next week. So I said I wasn't going to make any like more earnings previews on my videos on my channel on Sunday. That one where I look at the stocks that announced earnings this week. I've just checked and I think I've seen JD and Nvidia are reporting earnings next week. So maybe I might do one more. But we'll see how Nvidia does. If I'm honest, I am expecting a little bit of a bad earnings, but we'll see what happens. Hopefully that won't happen. So those 5 stocks that I think are massively undervalued right now, guys. Like I say, there's quite a few I could put down. Hope this helps. Just share my opinion out there on a few of the stocks. Give you a like, subscribe. Let me know any other stocks that you think are undervalued right now, and I'll see you on the next video.